Hello and welcome to Smart Finance Investor. Today, we're diving into a riveting topic that's reshaping the world of finance, the future of artificial intelligence in stock trading. In this video, we'll explore the incredible ways AI is revolutionizing the stock market, from algorithmic trading to predictive analytics and beyond. By the end of this video, you'll have a solid grasp of how AI is transforming stock trading and what the future might hold. Section 1. Understanding AI in stock trading. In this foundational section, we aim to clarify the concept of artificial intelligence in the context of stock trading. Artificial intelligence in stock trading encompasses a spectrum of technologies, including machine learning, deep learning, and neural networks. These AI systems are designed to process vast amounts of financial data and make sense of complex patterns that might be imperceptible to human traders. Artificial intelligence role in stock trading is multifaceted, primarily involving automation, pattern recognition, and data analysis. By automating tasks like trade execution, artificial intelligence can achieve unparalleled speed and precision. Furthermore, artificial intelligence's ability to recognize and respond to subtle market trends and news events in real time is invaluable. In essence, AI in stock trading represents a powerful tool for augmenting human decision making, reducing errors, and uncovering trading opportunities. Section 2. The current landscape. In this segment, we delve into the present-day scenario of AI in stock trading. It's evident that AI has already made a significant impact on the financial markets. Algorithmic trading, driven by AI, is a prime example. These algorithms execute trades at speeds and frequencies impossible for humans, capitalizing on tiny price differentials. Sentiment analysis is another critical area where AI shines. It scours news articles, social media, and other textual data to gauge market sentiment, providing traders with valuable insights. Predictive analytics, powered by AI models, helps forecast stock price movements based on historical data and market trends. Additionally, artificial intelligence contributes to robust risk management strategies, identifying and mitigating risks in real time. The current landscape reflects a symbiotic relationship between artificial intelligence and the financial industry. AI empowers traders, investors, and financial institutions to make more informed decisions, manage portfolios efficiently, and optimize trading strategies. Section 3. The future of AI in stock trading. The future of artificial intelligence in stock trading holds enormous promise and innovation. Quantum computing, with its unprecedented processing power, is poised to transform data analysis, enabling even more complex and accurate predictions. Explainable AI is on the horizon, addressing the need for transparency and trust by making AI decision-making processes more understandable for humans. AI integration in the financial services sector is expected to expand, with applications extending beyond trading to areas like customer service, fraud detection, and regulatory compliance. However, this growth is accompanied by its own set of challenges, including regulatory hurdles and ethical considerations. As AI evolves, so too will the role of human traders and investors. Future landscape will likely be a hybrid of AI-augmented decision-making and human oversight, striking balance between harnessing AI capabilities and ensuring well-regulated financial markets. Section 4. Benefits and challenges. The integration of artificial intelligence into stock trading offers a multitude of benefits. AI can significantly enhance efficiency by automating complex tasks, reduce human biases that can lead to suboptimal decisions, and improve risk management through real-time analysis. Additionally, AI has access to vast datasets, and can extract valuable insights from them, helping traders and investors make more informed choices. However, these benefits come with their own set of challenges. Ethical dilemmas arise regarding the use of AI, particularly in high-frequency trading and decision-making. Regulatory hurdles need to be navigated to ensure AI systems comply with financial regulations and maintain market integrity. There's also the potential for job displacement, as AI takes over certain roles within the financial industry. Additionally, the vulnerabilities of AI systems to hacking and manipulation necessitate robust security measures. Striking a balance between harnessing the advantages of AI and addressing these challenges will be crucial as the technology continues to evolve in stock trading. Section 5. How AI impacts investors. AI's impact on investors is profound and multifaceted. It democratizes access to advanced investment tools that were once reserved for institutional players, allowing individual investors to access cutting-edge analytics, trading algorithms, and portfolio management strategies. This accessibility can potentially lead to improved investment strategies and informed decision-making. However, it also places a premium on financial literacy, as investors need to understand the AI-driven decisions and insights presented to them. It's essential for investors to adapt to this changing landscape by embracing AI as a tool that can enhance their investment acumen. In conclusion, the future of artificial intelligence in stock trading is incredibly promising. AI is poised to revolutionize the way we invest, offering unparalleled insights and efficiencies. However, it's crucial to navigate this future with caution, understanding the ethical implications and potential pitfalls. If you found this video informative, please give it a thumbs up, share it with fellow investors, and subscribe to our channel for more cutting-edge financial content. Thanks for joining us today at Smart Finance Investor, and until next time, happy investing.